Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is Wednesday, May 8th. Today we're going to take a look at one we've looked at before. This is one in my portfolio. So full disclosure, I am long Havertys Furniture. It's out of the consumer discretionary sector. Let's jump right in. And if you are new to the channel or you would just like to help me out, and it really does help out a small YouTube channel like mine with the YouTube algorithm, every time you hit that thumbs up, subscribe to the channel, make sure you're subscribed, join us on this journey to financial freedom, join the vested interest community, hit that notification bell so you're notified whenever we put out any new content, and drop a comment down below. Let me know what you think of the video. Let me know what you think of Havertys Furniture. Again, thumbs up, hit that subscribe button, hit the notification bell, drop a comment, and share with anyone you think that might find value in the content. Doing that, again, really does help out a small YouTube channel like mine with the YouTube algorithm to spread the videos further. Thank you so much to all of you out there who have taken the time to do that. Really do appreciate it. Now, this is the vested interest stock screener. This is how I look at a company on a high level to see if I am interested in investing. If it meets 5 of 8 or 6 of 9, that doesn't necessarily mean I am investing. It means it goes on my watch list. I do more of a deep dive into the financials, and then I do a discounted cash flow analysis on the particular company, figure out what I'm willing to pay, and wait for the stock price to come in line or below that price I'm willing to pay. You can use this screener. This is also how I set up the stock pick of the day video. So we're going to run through this. At the end of the video, I will show you, where which ones of these it meets, which ones it doesn't, and whether or not it still meets the metrics. This one being in my portfolio, it is also a back check on the existing positions in my portfolio to make sure they still meet some of the initial criteria I set up for this screener. Now let's jump back over to Havertys Furniture. If you want to know more about this company, check them out at www.havertys.com. That's www.havertys.com. That is their homepage where I pulled this information from. Since J.J. Haverty founded Havertys Furniture Company in downtown Atlanta in 1885, we've grown to over 120 stores in 16 states. They do have stores in my state here in Michigan. To serve millions of customers, while many things have changed, our core values remain the same. We have continued to provide honest and friendly service and high-quality furniture to help you furnish your dream home. And just like it says, they provide furniture at living room, bedroom furniture, dining room, mattress and bedding sets, office furniture, outdoor furniture. Some of the mattress and bedding sets you would probably be very familiar with, Tempur-Pedic, Sealy, Stearns & Foster. Some of the major brands out there are ones that fall under Havertys umbrella here. A lot of American-made furniture as well, which I really like that. Let's continue on. Now, the reason we're taking a look at them, down 0.42% on the day. Not a big drop, but a drop nonetheless. Thought we'd take a look at this. We are talking about Havertys Furniture Companies, Inc., ticker HVT, out of the consumer discretionary sector. Closed out the day at $28.58. 52-week low, $25.05. 52-week high, $37.05. Definitely closer to their 52-week low than their 52-week high. They are within 15% of their 52-week high. I wrote it down here, $28.80 or lower. So $28.80 would be right at 15% of its 52-week high, or anything under $28.80. So right now, just below 15% of their 52-week low. Personally, I'd like them to drop a little bit under $28 here. I think my cost basis is right around $28. We'll see that here in a little bit. Market cap of $465.077 million. So they are a small cap company. A beta of 1.45, more volatile than the overall market. And you can see that volatility, which is another reason I'd like them to drop below my cost basis before I add any more and utilize that volatility to my benefit. PE ratio, price to earnings, at $10.36 per share. EPS sitting at $2.76 per share. Earnings date coming up July 30th through August 5th. Tune back in for that if you're interested in that. Forward dividend is $1.28. They are a quarterly payer. We'll see that here in a little bit. They do have, it's not an even distribution over the year. We'll see that here in a minute. Very nice starting dividend yield at 4.46%. Ex-dividend date, May 23rd, coming up at the end of the month. If you were to buy them now, you would be in line for their next dividend. Looks like they're going to pay out June 14th. 1 year target estimate, at least according to Yahoo Finance, where I pulled this information, $36.67. So they see it not quite getting back to its 52-week high, but definitely higher than where it currently sits over the next calendar year. Now, we're going to jump into the statistics, go down to dividends and splits. We're going to look at dividend yield theory to see if this one is potentially presenting any undervaluation. To do that, we look at their 5-year dividend yield average of 3.6%. We compare it to its current 4.46%. And since it is higher and much higher, that speaks to undervaluation. Not only undervaluation on this one, but undervaluation with a nice margin of safety. Payout ratio. Excuse me, I like under 75% or lower. This is at 43.48%, so under 50% is very good. That gives them a lot of room in case they ran into some issues with sales, revenue dropped a little bit or something like that. They have lots of room to cover their dividend payout as well as continue to pay down debt, reinvest back into the company, that sort of thing. So it gives them a big margin there where they can and as well continue to raise the dividend. Now we're going to look at free cash flow here. Again, if you were to go back to Yahoo Finance, where I pulled this information over here on the left of the chart, you'd find a lot of tabs, the analysis tab, statistics tab. We're going to look at free cash flow. That's under the financials tab. A lot of good information under the financials tab. You can find their balance sheet, their income statement, their debt to equity ratios. Do they have more assets over liabilities? Is their revenue growing? Is their margins growing? Are they paying down debt or taking on more debt? A lot of good information. You should know how to read a balance sheet and an income statement if you are investing in individual stocks. If you do not want to do that type of research, you should just stick to ETFs or index funds. I would recommend like a VOO, which is the S&P 500, or another ETF or index fund that tracks VOO. That's what Warren Buffett would recommend. That's the S&P 500, the top 500 companies in the United States stock market. Now back to Haverty here. 2020 free cash flow was $119 million. 2021 dropped down to $63 million, though there was a big jump up. You can see that this row above them is the repurchase of shares. So that may account for some of it. You'd have to do the math there and see what they were buying the shares at. 63 million here. 22 million in 2022. That's a big drop. 23, another drop. So to be honest with you, this one does not, at least over the last few years, 2021, I think accounts for the decrease in free cash flow because it was a big jump up in repurchase of stock. 2022 may be close to flat there, but 2023 is definitely down, right? 44 million and only repurchased 6,895,000 shares. So that's even down. So not only was the free cash flow down, but the repurchase of capital stock is down. But typically, these are cyclical companies, right? You're going to have a lot of people buying furniture. You don't buy furniture every year. Big buy in 2020 whenever everyone was still sitting at home, and 2021, and then it's decreased from there. So this would be one to watch. Hopefully in 2024, we see a bit of a rebound here. It'd be nice to them to start seeing an increase in free cash flow, but I would be watching that. So I'm going to say no free cash flow growth on this one, actually declining a little bit over the last couple years. Like I said, they are repurchasing their own shares. I'd like them to continue doing that, especially while they're cheap. Now we're going to jump over to stockanalysis.com. Again, I'm not affiliated with any of these sources, just sources that I like to go to, and I always recommend more than one source so you can make sure the information you're getting is accurate and up to date. Pick any sources that you like. Just don't blindly follow one source. You may be getting wrong information. Now, this is not going to be a real good one because there is only one analyst. Usually there are 8, 10, 12, 15 analysts. Only one analyst has their eye on Havertys Furniture Companies. But we're going to go with it. They're calling it, the one analyst is calling, it's not me, is calling it a strong buy. They have a low, average, and high estimate of $45, which would be a 57.45% increase from where it currently sits. That would be quite a bit higher than what we saw with the estimate from Yahoo Finance. So take it with a grain of salt. Anytime I just see one analyst, I'm trying to look for more options than that, but this is just all they had. Now we're going to look at statistics, look at return on equity and return on invested capital to see how well this company is reinvesting its capital back into the business. I like 10% or better for both these metrics. Return on equity meets that at 18.40. Return on invested capital is just a little lower at 9.89%. I'm going to give it the nod, but if you don't want to because it's under 10%, that's fine. I completely understand. Now, I didn't like that they didn't have forecasted EPS growth or revenue growth forecasted. I'd like to see that. I might do a little bit more research to see what's going on there, but I did not like that they weren't showing it. I like 5% or better EPS growth. Revenue growth, I'd like 5% or better, but it's not one of the metrics that I really look at. Now we're going to jump over the dividend again. I am long Havertys Furniture. I do have 103.823 shares. I am 28. It's a little below my cost basis. My cost basis is $28.61, so it's slightly under that at $28.58, down $37.55. I have $2,970.49 into the position. It's currently worth $2,967.26, so down $3.23. I don't know why it says 37.55%. That is not correct. Something's going on here. This is not showing up right. I'm not down 37% on it with only being down $3. There's something wrong with the math there. But down slightly, down $3.23, right? Whopping $3.23. Again, I'd like it to be a little under $28 here. I might nibble on it if it stays down in the 28 range, so long as it stays under my cost basis. And like I said, 15% of its 52-week low is $28.80, so it is below that. But I'd like it under 28, just my personal opinion. As we said, quarterly payout ratio, they're saying 38%. It was in the 43%, I believe, is what Yahoo Finance said. Either way, under 50%. I like under 75%, so lots of room to increase the dividend, continue to pay down debt, and then in case they get in trouble for a quarter or two, they've got plenty of wiggle room there to make it through. Nice dividend growth on this one, 8.13%. Only 3 years of growth though, but you can't get to be a dividend king or a dividend aristocrat unless you start somewhere. Buyback yield is in the negative, 0.75%. I'd like them to continue their buybacks and get that into positive. Shareholder yield at 3.74%. Nice shareholder yield there. 2021, they paid out $2. Now, I think some of these are special dividends here. All right, so we're going to look at the regular dividend. 2022 paying out 25 cents. June 2022, they jumped it up to 28 cents. 28 cents, another special dividend in November. It looks like November they have a tendency to pay out a special dividend. A little down in 2023, down to 27 cents, but then right back up in June, 29 cents. 2023, 29 cents. There's that special dividend, $1, and up to 30 cents in March. May, they paid out 32 cents, or in May, they announced 32 cents. They'll pay out June 14th, and they are on the March, June, September, December time frame there. So I like that they are paying out these special dividends. They're definitely returning a lot of capital to investors. That's part of the reason that I bought them. So I'm looking forward to this November payout to see if it's another big one like it's been. I don't know that it'll be $2, but it'd be nice to get another $1 per share here. And they are slightly raising it throughout the year as well. So definitely returning capital. Like to see that. Really like this company. Again, a furniture company. They're going to be a bit cyclical, so try to get them as cheap as possible. I'd like them a little under $28. That's where I'm at with it. And as you can see, back to the vested interest stock screener. Yep, we understand the business, so that's where we started. They did not have growing free cash flow, so keep an eye on that. They do have a growing dividend, although it's only been for about 3 years. Dividend payout ratio, 75% or less, yet actually under 50%, which is very good. Check valuation based on dividend yield theory. Yep, potentially undervalued according to dividend yield theory. Buy below current cost basis or within 15% of its 52-week low. It's both for me, right? It's within 15% of a 52-week low, plus it's below my cost basis ever so slightly. Now, I put a check here, return on invested capital and return on equity greater than 10%. Like I said, 9.89% is close enough for me. But if you took that out, let's just take that out and say that's not there. Earnings per share growth, nope, not 5% or better. They didn't list it. So let's not count the bottom one. 1, 2, 3, 4, 5. It would meet our criteria to be investable. So that means short of the free cash flow not growing, I don't have a bunch of concerns about this company, but I am going to be watching that part. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of Havertys Furniture. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Havertys you'd like me to cover in the Stock Pick of the Day series, drop it down below and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and invest journey for educational and entertainment purposes. Investing involves risk and money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.